structure. Now I'm about to teach what market structure is all about. Are you that kind of person who find it hard to understand market structure? You are being confused on where to place your highs, where to place your lows in the market, on the chart. So if that is your case, then this video is for you. You want to stick around till the end of this video to get the full information I'm about to share today, and make sure you click the subscribe button and click the like button to help YouTube algorithm to give this content to a lot of other traders out there. So without further ado, let's dive right into this video. Okay, all right, so this is market structure. What is market structure? Market structure is just the movement of the market, how the market is moving. Is market moving in an uptrend? Is it moving in a downtrend? That is basically what market structure is. Or is market consolidating? Market has three different kind of movements. Market has an uptrend movement, market has a downtrend movement, market has a consolidation movement. But some other people also say that market has choppy movement. Choppy movement, that means it's not moving up, it's not moving down. Even the movements in consolidation, you can't really say this is consolidation, just choppy, very close to each other. There, you understand? So market structure is basically the movement of the market, uptrend, downtrend, and so on. So let's look at the chart so that we can be able to understand with examples what is market structure. All right, so now on the chart, market as you can see, you can literally see the market is in a downtrend. Let me use this arrow for it. You can see lower high, sorry about that. Okay, so let me use this arrow for it. You can see lower high, sorry about that. Okay, so let's start here. Market created a higher high, then instead of higher low, market failed to create a higher low, then market failed to break this high, which makes this place a lower high, a lower high, a lower low, a lower high, a lower low, okay, a lower high, a lower low, a lower high, then a lower low. Then what we expect here of BTC is to create a lower high. Once market creates a lower high, then we expect a new lower low, because I'm using BTC now for my analysis. We're expecting a new lower low, and if market fails to create that new lower low, then we can say okay, maybe the trend is about to change. But if you look at it on daily time frame, you see that the bearish movement is still kind of strong. Until we see a break in this level here, we can't conclude that market has changed direction, because market still created a new low here. So now we understand that there's a lower high here, there's a lower low, there's a lower high, there's a lower low, there's a lower high, there's a lower low. That is market structure. There's nothing really hard in trying to understand market structure. It's just once you can be able to look at your charts, the first thing you see is the trend of the market, whether the market is in uptrend, is in downtrend, is in consolidation, is the market choppy. If you want to see a consolidation market, this week we had a lot of consolidation of gold. So gold right now has a shopping movement, but I really want to do my explanation of BTC, then I'll go to gold later in the video, so you just want to stick around for that. Okay, so apart from the chart, let's use a graphical illustration. Right, so here is higher high, higher low, higher high, higher low, higher high, higher low. Though that's uptrend, that's this one here is uptrend. But another thing I want to also say is that I'm using 4 hours time frame. You need to understand that on 4 hours time frame, you have what they call swing highs and swing lows. That's types of market structure. Now, types of market structure. We have, in this type of market structure, we have a swing high, swing low, swing market structure, and we have internal market structure, swing market structure and internal market structure. Swing market structure and internal market structure. This is taking you into market fractality. Market fractality is really simple. It's just a big English right there. So what is market fractality? Let's say, for example, you sighted a mango tree from afar. You sighted a mango tree from afar, or a cashew tree. Even though this tree has a lot of branches, the only thing you can see from afar is the whole tree. So you can literally see the height of the tree, you can see the breadth of the tree, but you can't really understand those things that actually bet the shape to which you are looking at from afar. So what you do is that you want to go close to the tree to be able to see the branches that have been formed in the tree, on the tree. So because of that, higher time frame is just like you looking at a tree from afar. They give you the overall market structure, the overall market structure, overall market behavior of the particular pair that you're looking at. Then when you go close to 1 hour time frame, 15 minutes time frame, then you begin to see little highs and lows that are inside this particular market structure that we are talking about. So in that kind of situation, now you want to be able to understand this market fractality for you to be able to get your own entry. Now let me explain this using the chart. Now on higher time frame right here on BTC, we are, as you can see, we are currently in a downtrend. So you've already marked out your higher highs. Let me just give it some space. So you are marking out your higher highs and higher lows. This higher low, and then here, or let's say, okay, here is your higher high, and then here is your higher low, then here is your higher highs, here is your higher low. So what we expect now is the fact the market should create a higher low. Network is slow. Okay, so here is what you will see. Let me bring it closer so that you can be able to see what is market fractality. Now these zones, this is our swing low, this area here is our swing high, this is our swing low, this is our swing high, this is our swing low. Then we expect market to create a swing high on a lower time frame. Then we see a dump to the downside on this particular pair. Now inside this, our swing highs and our swing lows, we also have small highs and lows, small highs and lows that you need to pay attention to. Now let's say, for example, now we've already identified that, okay, market has created a new low here by breaking this particular low here. Market has created a new low. Now it is time for market to retrace. It is time for market to retrace and create our new high. Then we get our low, swing high and swing low, which market is currently creating. Now if you look at in between the zone, then you will see another swing highs and swing lows. Now here to here is another high and low. Then you see this lower high. Then you see this lower low right here. Then you see this lower high. Then you see this lower low. The market comes and break this zone here, lower high, lower low, probably lower high to around 90k. Then from 90k we might see a dump down to coming. Let me. We might see a dump to around 70, 75k, 75k, 72k, 75k, 72k. So that's it about market structure. Market structure is very simple. You just look at the charts. If you can be able to identify the trend, just mark out higher highs, higher lows, higher highs, higher lows, so that it will be easier for you to know the trend, and it will be easier for you also to know when the trend has changed. On this particular market now, even though we are seeing this movement to this upside, doesn't mean the market has changed. We are looking at this market on lower time frame, but the 4 hours time frame, the 1 hour time frame is controlling the market. If you look at the 4 hours time frame and the daily time frame, they are controlling the market. If you look at daily time frame, you will still see that we are in uptrend. Let's go. Let's just take a look at higher time frame. Okay. Let's look at daily. Network is bad. So let's just be patient. Okay. So based on my analysis last week, I'm expecting BTC to come to this level, this particular level. That is level around 68k, 70k. I mean, between 75 to 70 to 68k. Market should get there before we see another high. You can easily see from these charts here that BTC is literally in an uptrend. You can see a swing high here, a swing low here, a swing high here, then a swing low here, then a swing high here. Now you can see that we are literally currently in a retracement phase. Which means that once price come back to this level, create some vibrations if there be need, then we'll see a new high on BTC. Definitely we are going to see a new high on BTC. That one is certain. So if somebody is looking now to buy altcoins, to buy meme coins that are going to do well, it is literally better to wait to see market around 75 to 73 to 71k. If market get to that level, then if you buy, you won't really see much dip before you start seeing greens. Seeing greens. So I feel this is that zone that is best for you to find altcoins that you want to buy, because anything that will make BTC to start pumping from here is going to create a new high, and a lot of people who buy low right now, they are going to make a lot of money by the time they are selling high. So if BTC is able to touch that 75 to 70k, then the next level we can be looking at is BTC at 120k, 130k, 140k. That means if you buy at 70k, you literally be getting like 2x of BTC at that level. So that being said, we can clearly see that BTC is currently still in an uptrend, but on lower time frame that we trade on 4 hours, we can clearly still see that BTC is on the retracement phase in daily time frame. Then we are seeing a downtrend on lower time frame. It's just as simple as that. Market structure is just market movement, market behavior. You just need to be able to identify the higher highs and the higher lows of your chart. By the time you are able to identify those things, it will be easier for you to know what to do. And one thing you need to also understand is, let's say for example now, the way I'm trading, I only trade BTC, right? The way I'm trading BTC now, I'm seeing that okay, BTC is currently in a retracement phase, and it's coming to 70k, 75 to 70, 70 to 75k. I'm seeing that it's coming to 70 to 75k. Then I'm still buying and buying, whereas market has not shown any significant change in market movement. If there's a change in market structure, if there's a change in market behavior, then I can start saying I want to be looking for buy positions till we get to new high. But as long as market has not given us this change of structure that we are looking for, then our selling is still valid, so long as we see a sell setup. It's as simple as ABC. That is, the trend is your friend. When market is in a downtrend, sell. when market is in an uptrend, buy. All you just have to do is make sure you understand the trend of the market before you start making a decision. If market is in a shopping, you can't be looking let's say market is consolidating, you can't be looking for 10x, 20x, 10 risk to reward ratio, 20 risk to reward ratio on a market that's consolidating. Definitely it's not going to touch your TP except you use a very tiny stop loss, and market is able to move to your direction. So once you are in a trendy market, then you can be saying, okay, you want to target 10x, 20x based on the trend of the market. You want to stick to it for some days. So that's just my advice. Follow the trend. So as I promised earlier, I said I'm going to go to gold. I said I'm going to go to gold because gold literally explain what I'm saying. Gold and BTC is literally in opposite direction. So here is gold. Here is gold. Obviously, on this chart, you can easily see that market is in an uptrend. Market is in an uptrend. Market is in an uptrend. The one thing is that I also believe that gold should still sell. Gold should still sell. Gold should still sell. Because this higher high, higher low, higher high, higher low, higher high, higher low, and then we see higher high, higher low, and we see higher high. But mistake a lot of people make is that they feel like it's every pullback that can be tagged as a low or as a retracement move. You know, we have impulse move, we have retracement move. That means when market is creating the bigger move, this move from here to here is impulse move. This move from here to here is retracement. Now the mistake a lot of people make is that once market pullback, then create a new structure, they believe that new structure that was created is a low. But most times this is how it works. If a market creates an impulse move and the retracement doesn't retrace into 50% of the impulse move, most of the times that low is always an inducement. That low is always an inducement. And once it is an inducement, market is going to come back to that level to grab that liquidity. So on gold, I don't know, I might be wrong, market will always be right, but I believe gold should still come to this head here. Market should still come to that level before we can see a strong new high. Why did I say that? If you take your Fibonacci retracement and you put it right here and you slash it up, you can see that exactly the same place, because it has to retrace to this 0.5 Fibonacci retracement level before you can say that okay, market has actually retraced. So what we are just seeing here is just inducement. Market is still coming on this level to come and take it and take out all the liquidity below this level, then we'll see a new high. So that's my take on gold. I don't know when that will happen, but this video will definitely be online so that we can be able to see it. So what level am I expecting it to come to? 2,700, around 2,700. Then from there we'll now see a strong 3,000. Yeah. So that is that on market structure today. I hope you enjoyed this video. Please, if you get value from this video, make sure you like and subscribe to this channel. The liking is just to help the YouTube algorithm to be able to share this video to more traders who are interested in market structure. So please subscribe to this YouTube channel to help us grow. Thank you, and see you in the next video.